Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. Why is Tesla's stock dropping after the earnings call? Well, firstly, to put you at ease, it's nothing to be concerned about. It's quite simple. Tesla missed the street's expectations, and they're being punished for it. The street estimated $1.03 a share, and Tesla came in at 80 cents. This is for non-GAAP profit we're referring to. This is still an increase from the third quarter at 76 cents, but no, not a huge increase, considering revenue was up from 8.8 billion to 10.7 billion. So why should we not be concerned about this? Well, let's work out what is actually important and what matters, and see if we can work out if this is a big deal or not. So why were profits less than expected? Well, Tesla is still very much a growth company. They can't make enough cars to meet their demand. So what would a smart company do in such a scenario? Grow as much as they can until the supply meets their demand. So growth costs money. When you spend money, it takes away from profits. Tesla are not messing around. They're not trying to please Wall Street or short-term traders. They just want to get as many cars made as quickly as possible, and with how much profit they do or do not make. The fourth quarter had some expensive investments. I don't believe we know how much Gigapress cost, but at a guess, they're very expensive. They work so well and reduce so much time and cost in the vehicle, as well as improving the safety and structure of the car, so much so that Tesla has been going all out and ordering quite a few lately. Well, each time they order one of these, it affects their profits. However, for the next quarter, it will have improved their margins. These machines are giving a very positive return on investment. In addition to that, Elon received some more stock-based compensation, or SBC, of $267 million. This is part of Elon's bonus award of hitting milestones for Tesla, reaching certain levels of market capitalizations. The vehicle average selling price, ASP, has declined, particularly due to the price reductions in the China-made Model 3, and also fewer consumers purchasing the Model X and S over the more affordable 3 and Y. The changeover to the new Model S and X production line not only halted production, but also created significant costs. They required new equipment, machinery, and processes, but now demand for Model S and X is the highest it's ever been, and the waiting lists are around 18 months already. On the earnings call, though, Zach Kirkhorn said that in Q4, they actually did see gross auto margins increase. Now, that is the one that truly matters. All the rest is noise. This is the best thing about the company from a profitable standpoint. The fact their margins are just so incredibly high, and not only that, their margins are that high while also delivering the cheapest product on the market if you value electric car by dollar to range factor. And whenever another car tries to undercut their prices, then Tesla simply go under theirs again. No one can compete on price with Tesla. But they still manage to be the cheapest player in the market while maintaining a prestigious brand. Even when I talk to people today about Teslas, they seem to think they cost so much. They're shocked when I tell them how cheap a Model 3 is. So what is the outcome from all this additional expense? Well, the Gigapresses reduce a lot of manufacturing cost and speed, so the margins of the cars will increase from this alone. When you're making hundreds of thousands or even millions of the same car, each time the Gigapress is used, its marginal cost of production reduces. For example, if you spend $10 million on a Gigapress, and every time it's used, it saves you $100 on the car, if you use it once, then it has a cost to you of $9,999,900. But if you use it 1 million times, it's only cost $10 per car. And if it's saving you $100, it's now a marginal cost of $10 to do that. And the more it's used again, the more the marginal cost of the Gigapress declines. Another way to look at it is recovering the investment. At $100 saving per press, you would need to use it 100,000 times, and then you've saved $10 million, the initial purchase price. If this took around 10 years or so, then you'd also include net present value, and you would factor in a discount rate. However, I think Tesla might be recovering their capital expenditures on the Gigapress in closer to 1 or 2 years. Don't quote me on that, it's total speculation and conjecture. After all this extra expenditure on the S and X manufacturing line, we've already seen what that's done for demand. We were sitting around 15,000 or so S and X orders a quarter. This would take us up to around 30,000 I think now, which was about the peak before the Model 3 came out. However, Tesla do only claim 100,000 vehicle capacity for S and X, which would still be 25,000 a quarter. Not only that, Tesla raised the price by $10,000. Now at a guess, they're now making the new S and X for less than the older versions due to all the extra efficiencies they've learned in manufacturing cars since 2012, when the Model S started production. For example, we already know they've added the heat pump and most likely the octavalve in there too now. So I'm going to guess their costs are down. So for the S and X, we have sales up, we have prices up, we have costs down, and likely a faster production line. These are literally the best things you can ever ask for a product. And when they are at this price point too, it's just going to be massive. Expect a lot of profit to come from these cars. But that's Wall Street for you, fickle to the numbers. If you miss your target, you get crucified. It doesn't matter why. Over the next few days and weeks, more people will watch videos like this or read articles and understand what's going on, and the confidence in the stock will likely come back. As for me, I've never been more confident about the stock in my life. Everything is going well as far as I'm concerned. And I'm not saying the stock won't stop dropping. It does appear to be on a downward trend right now. But if you're a long-term investor, then it shouldn't bother you. Although I'm sure it probably does, as you might have lost thousands of dollars. I hear you, it hurts a bit. But that is your emotion talking to you. You've only lost on paper. It's not a real loss unless you sell. When investing, emotion is not your friend. It will tell you to sell when it drops and buy when it goes up. But we all know the saying, buy low, sell high. Emotion does the opposite. If you absolutely don't care that the stock has dropped because you realize there is no reason for the drop, then you're there. You are a rational investor. If not, then practice and train yourself not to get emotional about the drops. And yes, the same when the stock spikes too. I don't get that excited anymore if it goes up 5% in a day. Stay rational. That really is what makes for good investing. And you can actually go one step further. What if I told you that I'm actually happy that the stock has dropped? Why? Because I wasn't planning on selling. In fact, now I can purchase a few more stocks on a dip. Remember the term, buy on the dip? Well, here we have a dip. Remember, I'm not here to advise you what to do. I'm not suggesting you buy now. Please use your own common sense. I'm just trying to tell you how to think like an investor and be rational. I have no idea of your financial situation, and I would never dream of telling you what to do with your money, except for buy a Cybertruck, if you watch my video on how you could make 100x with Tesla. But personally, I am waiting to see if it dips just a little bit more first. Tesla has been known to take some really big dips at times, so I'm waiting to see the bottom first. Anyway, I hope that cheers any of you up. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.